So people are being very cautious, clearly. How are loan applications?
We are seeing, so let me just first frame the size of the company. We do more small business loans than anybody else. We have more middle market customers, so we see a ton of customers. The approval rate is back where it was pre-recession, but the application rate is a fraction. Now, it's coming back, but we would love to have more borrowers. We typically run our company about $1 of loan for every dollar of deposit. Today, we are in the 80% range, so we are about $200 billion short of loans. We would love more loans. We are hungry for loans, but there's a cautiousness because people are unsure about tax policy, about what's going on with fiscal cliff and regulatory cliff and a whole bunch of other things, and it creates a fog or this sense of uncertainty, which kind of is a really important ingredient.
In a big picture perspective, is it a good thing? I mean, there is the argument that the financial crisis was caused in part by people having too much debt, and they need to scale it back. Is that what's happening?
There is truth. There is no one answer, in my judgment, what happened, and there's no also one answer in, if that had been the case, we'd have found that a long time ago. But there was too much debt. But here's the thing that a lot of policy makers fail to understand. Because of the low rates today, even though consumers carry a lot more debt than they used to. In fact, if you go back 20 years, it's gone from like 4 or 5 trillion to 14 trillion. Now it's come down maybe $0.5 trillion with payments and charge-offs. But the debt carry, the carry of the cost of that is back to the early 90s because interest rates are so low, there's much more disposable income. But people are saving now like they've never saved before.
Even at the incredibly low rate.
Even incredibly low rates.